let you guys go ahead and go down the line and give a little introduction.
All right, good morning. My name is David Goubert. I'm the CEO of Air Wellness. I've been in the industry now for about a year and a half. Joined Air Wellness a year and a half ago. And before that, most of my experience has been in the luxury sector with Louis Vuitton, LVMH, and most recently running Neiman Marcus.
Great, thanks.
Jesse Shannon, president at the Cannabis company. Been in the space for a little over 4 years. Prior to that was in social media, early ad tech. Spent a bunch of time on Madison Avenue. So.
Hello, good morning. Thanks to Benzinga for having us all. Glad that we could come and have a good conversation this morning. Aaron Miles, I'm our Chief Investment Officer of Verano Holdings. We're a multi-state operator in 13 states, encompassing 138 dispensaries, over 1 million square feet of cultivation, a big footprint in Florida, which I know we're going to get into. Bulk majority of my career has been spent on capital markets, investors, M&A, that kind of stuff. But really happy to be here today.
Hi, I'm Dan Ahrens. I'm a Chief Investment Officer at Advisor Shares, and that makes me portfolio manager of, most people know our funds by the ticker symbol MSOS, or MSOs. Also YOLO, that was a predecessor to MSOs. And more recently, MSOX, which is a leveraged version of our fund, MSOS, which happens to be the largest cannabis ETF by far in the world. And MSOS, of course, specializes in US only cannabis investments.
Great, welcome guys. So our panel today is on economic indicators, and we're sitting here in the state of Florida. We've got some really great news recently that the Supreme Court passed the ballot initiative to have adult use on the ballot. I think that's going to impact a lot of companies. And Dan, why don't we go ahead and start with you? I know that Air is very heavily invested in Florida. It's a big market for you. What do you see the potential outcome of if adult use passes, and how are you preparing for that?
Thanks, Tiffany. It's not a if, we got to make it happen. So yes on 3, and let's make it happen in November. Well, first, from an industry standpoint, I think everybody knows that, but that's major, that's big. Today, Florida is the largest medical market, over $2 billion, and usually when a state passes adults, we're seeing the sales go up 2-3 times. When you think of Florida, that has today 1 million medical card holder, 23 million people living in the state, 130 million, I think, visitors a year. It's going to be huge. So it's safe to think that the industry will be the state will be a $5 to $6 billion business in Florida, making it the largest in the US and in the world. When it comes to Air, so we're in 7 states today, and the thing that's pretty, I'm not going to say it's unique, but important for Air is that out of our 91 dispensaries, only 14 are adult, which means 77 are medical, and out of those 77, 64 are in Florida, and Florida is our #1 state. So for us, this is major. And so it's turning 64 stores, plus the stores that we would open, and I'm sure we'll talk more about that, makes it a completely different profile of the company. So for us, it's major. We're obviously very focused on it. We're focused on the same time as Ohio that already passed in November, and hoping to see that happening as well in Pennsylvania. But Florida is definitely key for the industry and key for Air.
Yeah. And how about Verano, Aaron? What is the company doing to be ready to capitalize on the opportunity if it passes in Florida?
Yeah, I think for starters, we got to point out David's shoes. They're the best at the conference. So they're slightly modified, I believe.
Thank you.
But yeah, no, you're going to see me later. I'm going to have marker on my shoes here. But no, I would say, Verano's MO from the beginning was to really establish a presence in a limited license, vertically integrated state, establish ourselves, grab market share, and then position ourselves ahead of adult use. And we've done that in Illinois, New Jersey, Connecticut, Maryland. And now Florida, we're really doing the same thing. And so what we have right now in the state of Florida is 74 dispensaries. We have almost 300,000 square feet of cultivation. And while we're not going to sit here and lay out our blueprint of what we're doing ahead of what adult use is going to look like, I want to echo some of the stuff David talked about, which is, you look at a state like Maryland, there was a 2.5 to 3 times bump just from that state turning over to rec. We did $222 million in revenue last year alone in Florida. And you think about 120 million visitors with, the medical program that David highlighted, you can start to do some simple math on what a state like Florida is going to look like. And then you start to layer in, the profitability of a state like Florida, because what you grow, you have to sell through your dispensary. So the margin profile is a lot better in that state. So now you start thinking about what free cash flow looks like, and you really start to look at what that does for your balance sheet. So what we're doing is making sure that we're going to be able to maximize every ounce of demand that would come out of the state. So that's going to be dispensary growth. That's going to be maximizing our current facilities, potentially building out other facilities as well to get ahead of this demand in the state of Florida. And the biggest, the thing that we have going for us too is there's some major ballot issues that are bringing a lot of attention. Cannabis doesn't get the headlines, but there are stuff that's going to be coming out, in this ballot that's going to bring voters to the boxes. So hopefully, we continue to gain that momentum. We're all a part of, the venture down here to kind of hold hands and knock on doors and make sure people, go out and vote yes in the fall. But Florida is just another state for us that we're going to get ahead of from an adult use perspective. And the magnitude of a Florida, it's not a Maryland, that could potentially, gain some more national attention as well as cannabis becomes more and more accepted.
Yeah, absolutely. Jesse, the cannabis, you're not as heavily weighted in Florida, but obviously there are other states with lots of great opportunities right now. Where do you see the biggest growth potential for the cannabis?
Yeah, I think everybody's expecting me to give the obvious answer, which is Virginia, which is the best medical market in the country right now. Obviously, 14 dispensaries in Florida. We look forward to Florida, right? For us, we're focused on some of these other markets where we see, Aaron spoke to limited license, where we see that supply chain developing very quickly. A state like Virginia, fairly under-indexed from a patient registration point of view right now, right? So it's still early. Best guess, they report a little bit differently, probably around 1.2%. Florida's at about 5%, Pennsylvania's at about 4%. Lots of organic growth available in Virginia. And now we have some runway to continue to build in the infrastructure to get ready for adult use in 26 in Virginia. So we're excited about that market. Ohio, obviously imminent, right? So we're preparing for Ohio. We look at markets like Pennsylvania, Delaware, really like what we're seeing as a turnaround in West Virginia as that market continues to develop. We've got a third store to open in New Jersey. So, we're in an interesting position because we deployed an enormous amount of CapEx very early on in building scaled facilities in pretty much all of the markets that I just mentioned. So as those markets mature and as they ultimately come to conversion for adult use, we're really well positioned, more so than we have been in other markets prior when there's been an adult use conversion. So Florida is absolutely a focus. I think we're all excited as an industry about what Florida represents, which is more than just a state. I think it's sort of a inevitability with the continued growth and regulatory change for the industry. But yeah, we're looking forward to some other markets as well in the footprint.
Great. So Dan, how much does all this weigh into your investment strategies?
It's a great question, and we are very well aware of Florida and fully expect it in November to pass. And looking at numbers around the country, we think that's going to make the entire Florida market double or triple, and that makes it the largest cannabis market in the world. But when it comes to the fund, I often have to explain, first of all, our fund is just about $1 billion. It is very top heavy, and what that means is a very large percentage of the assets of the fund are in the top 5 holdings and top 10 holdings. And all 3 of these fine companies, of course, are in our top 10 holdings. But am I going to change the way it invests based on Florida? Not so much. And the reason is I often have to explain that we have to manage that fund very gently. There is a competitor fund that's a little bit smaller, and it's I think it's index based. I'm not even sure what it is. But they've rebalanced on a quarterly basis and done it poorly. I don't know. They upset the market. So I manage the fund very, very gently because we own most of these positions through total return swaps. I think a lot of people have heard that, or if not, you can get education on our website. Because they're federally illegal still, they can't list on major exchanges. We use total return swaps, and they're not all that liquid. They're liquid stocks, but I can't go moving around hundreds of millions of dollars in these stocks without upsetting their stock prices. So we manage the fund gently, is what I mean there. We are very focused. When we have extra money to move around, we are going to focus on the states that we think are coming, like adult use in Florida, like the other guys mentioned, Ohio, Pennsylvania. But all of the MSOs are very state focused because we all know, even if we get federal reform that we're all expecting, there's still going to be a state focus for adult use, right? Of course. So our fund stays the course. We're well aware of what's happening. When I have extra money in the fund, yeah, we're probably going to lean a little bit more towards the Florida focus, but not more than that. I hope that answers.
Yeah, no, makes sense. So other than, looking at the specific states and the opportunities to move to adult use, what other economic indicators, Dan, are you thinking about in your investments?
It's interesting. We get into discussion of, do fundamentals matter? And of course they matter in the long run. It separates the best companies from the not best companies. I don't know how to say that better. But federal reform is so important. It's the rescheduling. It's the vote in Florida that's not federal reform, but it's still regulatory. The Florida vote in November. What happened in Germany? Safe or safer banking is still moving along. And we're in an unfortunate situation where these US companies, which are very, very different than Canadian companies, even though they traded quite a bit similarly in the last 3 years, but we're seeing a separation this year of people realizing that the real opportunity, the biggest opportunity is on the US side of the border. So unfortunately, these stocks are overly tied to what's happening at a state level, what's happening at a federal level, all the various moving pieces. It's infinitely important. And it very, very much weighs on how we manage this fund with asset flows, with the difficulty of liquidity and trading and spreads, and I deal with market makers and dealing with counterparties to try to keep everything moving smoothly. But yeah, there's no denying that fundamentals matter in the long run. They don't matter so much in the short run. It's really unfortunate that it's all about federal reform at this point and state law.
Yeah. I think I read a quote of yours, Aaron, that said something similar to that we're not trading on fundamentals right now, but we're trading on the volatile government and regulations there. So, I think a lot goes into when you're thinking about markets moving from medical to adult use and considering what investments you're making, CapEx spend, getting ready for that market to double. Jesse, what steps is the Cannabis taking to get ready for, say, Ohio, for adult use sales to begin in Ohio?
Yeah, so, we operate in 15 markets right now. We've seen a lot. We're in some of the oldest, most mature adult use markets in the country, and then some of the most recently converted. So we have a lot of sort of data and internal knowledge when it comes to how to approach and handle these conversions. We've run into some speed bumps with the last couple. Candidly, we had, I think it's pretty well known, we were in the middle of a large potential combination at one point, right around the time when we're planning for Maryland and New Jersey. We had a bit of a regulatory hiccup right in the beginning of that one. Ohio, I think we're very well prepared for. We understand what it's going to take to be successful there. The cultivation and manufacturing footprint there is very well scaled for the market. We've got some great partners, in this space. So I think we feel really good about filling in gaps, right, with regards to being able to make sure that we can serve the communities and the customers. We keep talking about these state-by-state strategies and these conversions and everything, and I do think it's worth just sort of, staying positive about the fact that we were talking backstage, the growth is inevitable in this industry, right? Like, this is one of very few spaces that we see right now as an opportunity to operate. DeFi, AI and AGI, and cannabis are probably the three spaces that inevitably are up and to the right over the next 5 to 10 years. It's just a matter of timing and use case. And so as we look at these conversions at a state by state, we're also still very focused on what that means at the macro. And so as a national player, we have to continue to think about putting in place infrastructure with technology and SOPs that make it easier every time to convert these coming markets. So hopefully Ohio will be, our best yet. But like I mentioned earlier, there's more on the horizon right after that. So, we got to get it right, and we have to continue to find ways to optimize after that.
David, I think you mentioned that there are other things to consider going into adult use market. I mean, maybe your product mix needs to be different. I assume there's challenges and opportunities. Can you talk about that a little bit?
Yeah, sure. There's definitely challenges in turning the Florida market into adult market, and it's cannabis, so we don't lack of challenges anywhere, right? When you think about Florida, and by the way, that's going to be Ohio and Florida would be the first markets that air would arrive at the beginning of turning adult. Like, we haven't had that chance in any other market before, so it's pretty new to us and exciting. Some of the challenges in Florida, or questions, let's call it questions for now. One is, this is a vertically integrated market where you can only sell what you grow. Is that going to remain the same when it turns adult or not? But anyway, we need to prepare ourselves to that. Another specificity of the state is that you can open, say, as many stores as you want. So today there's, I think, 630 dispensaries in the state. Where are we going to be 2 years from now? And if you want to keep your market share as a company, what does it mean for us over the next, let's say, year and a half or 2 years? So I'd say the key challenges for us, or the key things that we need to prepare, one is, to your point, creating as much agility, flexibility, capacity in our product mix. So we're investing in lab, kitchen, and other things so that we can work on that product mix. So I'd say that's one question or challenge that we have on how that product mix is going to evolve. The second one is making sure that we have the capacity, and we're looking at indoor capacity right now to increase our capacity in preparation for adult. And then the third question is really on that number of dispensaries, meaning if we want to keep that market share, and that's what we want to do, what does it mean 2 years from now? Are we going to be a 1,000 dispensaries state in a year and a half? I don't know what you guys think, but if I think for us, that means moving from 64 stores to 100 within a year and a half or 2 years, and making sure that we place that in the right places for adult. So those are some of the challenges, but we've got to work through those surprises.
Yeah. So Dan, do you see these opportunities in states like Florida, Pennsylvania, Ohio, increasing the M&A activity?
Yes, I do. Especially in Florida. I think there's operators that don't have the Florida exposure right now that, again, with expectations about getting approval in November, there's going to be companies wanting to buy their way into Florida and other states as well that we've talked about. One thing I'm going to warn people of is, from an investment standpoint, you can't guess who's buying what, ever. Don't try. You'll fail. There's going to be M&A deals. A lot of people are waiting on the sidelines for changes at the federal level. But now we have the clock ticking on people wanting to get into Florida. So there's going to be a lot of internal discussions among the operators like these guys about, do we wait? We can't wait any longer. Do we do something now? Do we do something temporary? So definite M&A, I think, especially in Florida. Don't try to pick who they are.
So how about Verano? I mean, you know, the company, like many cannabis companies, very, very acquisitive back in 2021. Should we expect to see more acquisitions in the future? Should we expect to see a focus in Florida to keep the market share?
Yeah, I mean, I think it's to be determined, right? Like you talked about, you know, a comment I made where, you know, we don't run our business based off dislocations in the market. But the one thing we do focus on that dislocation is the valuation of where we're trading at. Because a lot of deals get done with stock, which we use as currency, and we have to be hyper, you know, careful on dilution, right? And so while M&A there might not be an execution of deals out there, the conversations never stop. And the luxury of our business is you can look at a map and you could kind of see who you need to reach out to and who you need to be having conversations with. And so while I won't go state by state in what we're looking at, you know, we're always looking at ways of adding valuable assets. We're not just adding assets to add top line growth. It has to make sense for the Verano kind of structure. Again, limited license. We're, you know, a highly profitable company with $73 million of free cash flow last year. So we're not going to necessarily buy a cleanup and have to focus a lot of attention on that. But, you know, in this space, and you know, I know these gentlemen up here can agree with this, we have to look at where we're spending our dollars. Everything is from an ROI perspective. If Florida turns on, I mean, think about what I said earlier about the 222 million of revenue on the top line, and then, you know, Dan's talking about 2.5 to 3 times bump. That's in a normal market. So you're now talking about $400-500 million bump in just a normal market, maybe more. That's a huge return. So if we're going to go out and execute on another dispensary in one state and spend the bandwidth and time and effort to get that done, when, you know, right here in the state of Florida we could be investing dollars, you have to have a balanced approach on how you're looking to invest your dollars. And so we are constantly looking at M&A opportunities. I would say, without a prediction out there, you know, I think things pick up, especially a post-DEA world. But we're hyper patient, and we can be not hyper patient and be ready to pounce, you know, if the opportunities arise. But we're always looking to clean up the balance sheet. We're looking to add the right assets, and we're looking to invest in our footprint to make sure that we're ahead of these types of moves.
Mm-hmm. And you mentioned a post-DEA world. I mean, what about the cannabis, Jesse? I mean, what do you see for the company if we get to see federal reform?
I mean, I think we're all confident that at some point common sense wins, right? I think with the government, you always have to wonder, you know, when is that lightning strike moment going to be for them? I think post-DEA, what you see are businesses that can operate a bit more normally with regards to the investment thesis of how it is that we're deploying capital to, you know, not only expand opportunities in markets where we operate, but also finding ways to become more efficient. You know, I mentioned technology earlier, you know, brand building, development on that side. I think you're going to see a more normalized ecosystem at some point for things like advertising and marketing, which is still obviously a big issue for us as an industry. So in a post-DEA world, I think what you see is an increased appetite for investment into areas that we've probably had to pull back on a bit, because we should be focusing on the core operations of the business and driving efficiency through that aspect of the supply chain. So things like innovation, technology, marketing, brand building, a lot of the fun, creative expressions of what will make these companies differentiated and unique, I think you'll see increased investment there. It would also be nice just to have another sort of affirmation or vote from Washington showing that they understand, you know, that toothpaste has left the tube a bit here. Like, this is a pretty big industry. This country loves weed. Like, we're going to have to figure this out. So I think that's kind of what we're all looking at right now.
Yeah, great. Thank you. Well, I want to thank you all for being up here. So it was great to be here at Benzinga, and thank you guys.
Thank you.
Yeah, thank you.